Well, welcome again to another video. It's been a long time, and this video gonna be talking about price action on XAUUSD gold and what exactly has been going on here and what to expect in this coming week, and as well as some continuation of how to read the price correctly. That being said, my name is Rocky Calvin, and welcome to Cashline Trading. So apparently on Friday, I gave a signal. If you check on posts on this channel, I gave a signal of sales on XAUSD on specific level. I think it was around 46 16, something like that. I don't know. I can't really remember well. Yeah, it was around 46.16, and we're gonna take a look at why I decided or I gave that sell signal. And at the end of the day, it went on winning. It dropped, and I want you guys to take a look at what was really happening here on gold on a daily time frame. First of all, on daily time frame, we've heard like a couple of candles, and like literally the whole week we've been just consolidating in this specific zone. And most of the time, this usually means that the market is not really interested in going higher, because if it were interested in going higher, we would have at least displaced above this Tuesday candle or the Wednesday one. But as you can see, we kept on closing back in, and this was saying that this price is interested in something lower. So when you ask ourselves lower, you can ask yourself question like, if you're going lower, these are usually trading. These are usually teach like, if you are thinking of selling, ask yourself, what is the drawn liquidity? Where are you selling to? Why are you selling that low? And as you can see here, we have a period where we have a bullish daily fair value gap. This one here, you see this one? This was our primary target. This one here, this one. So apart from that, if we are buying, especially right now, you see gold just hit all-time highs over here. So when you're trading all-time highs, it's always a no man's land. It's just about buying and buying and buying and buying, and you know we don't really have so much targets. But when you use Fibonacci, maybe if you try and use Fibonacci levels, they can give you possible levels whereby price might be interested in reaching out. So when you're buying, you're going to be targeting them. So that being said, on Friday, as you can see, we did not create any higher high over here. So we were looking forward to selling. And on the other hand, I did a video and did a lecture on how to to study price action, how to to read market structure, and I gave you guys some of my secrets. I'm not gonna speak them again into this video, and it's the same thing that happened here. That's the same reason why I was selling also. So you guys go and check the video about market structure. You'll see what I'm talking about. So that being said, after I realized that this market is likely interested in something going lower, so I had to ask myself the first question: if you're asking lower, what am I targeting down here? What do I need? What is it that I can be able to target and exit from here? And as you can see, apart from that, another confluence is that we when we created this gap, we did not create this was not a breakaway gap. Breakaway gap is when now this second candle or the third candle that is creating the gap usually displaces its body above this displacement gap. Okay, but unfortunately it just took liquidity above it and closed back in. This is usually a sign that market is likely to come back in, meaning that there were some orders, massive orders right here. There were some trades, there were some orders that were not activated over here. So it has to come back in here, take these orders, and move forward. So that's why we created this gap right here. So that being said, that was our confluence as well. Okay, the fact that we did not create a breakaway gap, meaning that we are likely to come into towards this low. So in case this low gets violated, for example, this candle that's coming next Monday or maybe Tuesday, right? I don't know, any day, displaces below this bullish daily fair value gap. This simply means that we are even interested in something lower. So the question is going to be, what next? We have another daily bullish fair value gap right here. You have to mark all the speed arrays. They're very important right here. So this will be our next or secondary target. After that, in case these candles now displaces their body aggressively again below this bullish daily fair value gap, then that simply means that we are interested in something even lower, and that's gonna be another. This was balanced, but not fully balanced. As you can see, this was not fully balanced, but here it was kind of balanced here. So meaning that we are either coming here or we're coming towards these lows, because below these lows we have a daily fair value gap. But I don't think that is likely to happen because gold is very bullish. If you take a look at the structure of gold that has been happening over the years, take a look. This was 2025. We began from around, maybe around here. Let's see, that's May. Just take a look. Take a look at how gold has been very, very bullish. This was January 2025. All the year, it kept on rising, kept on rising. Right now, we're here. Take a look at the previous year's back again, 2024. See what happened. The same thing. So do you expect like gold is gonna break down right now? Given with the with the geopolitical factors that's going on, no, gold is going towards 5,000, and even after 5,000 it's going to hit 10,000. Gold is going to be competing with Bitcoin at some point. So that being said, I don't expect gold to come all the way down here. I'm only expecting it to make some, to come and, tap in some liquidity, grabbing some orders right here. Then we get to keep on going higher. So that being said, now let us move into, for example, hourly time frame. And I'm also going to be teaching you guys, I'm going to make another video after this about how to day trade. And this is going to help you. It also has the same confluence with whatever's going on here. So I had signaled sales from, it was 46.16. You guys go and take a look at my post on this channel that I did on Friday. I made like two posts. The first one was supposed to be, the first one was sales, and later on I started talking about a little bit of buys, whereby I wanted some buys from here, targeting some highs up there, the liquidity up there, and I initiated these buys or talked about these buys. They are not, they are literally low probability, but I did not like the fact that gold was coming to grab liquidity below here first. So when it was coming to grab liquidity below here, I said, okay, let me take some advantage and pump it up as we go under. And that was not really such a high probability. And you see, some of the reasons why I even initiated this buys was, I think, was because of a conference of somebody. I think I saw someone, I think online, talking about they are planning to buy gold somewhere here. So I think they kind of confused me. And this is, there's this problem whereby you have to stay away from people who tend and post signals, and they oppose, like, your bias. They oppose what you're doing, because that guy kind of confused me, because when I was trying to take a look at, okay, what is he talking about, like on 15 minutes time frame, I realized, okay, we have some liquidity down here. And you see, when I was looking for my entry, I wanted price to go higher, to go up there and give me my sales. But when this guy was talking about buying over here, I tend to open the charts and so, okay, we had some liquidity over here, the Asian liquidity. So I was like, okay, if we're taking out this Asian liquidity, this can be a position of buying as we target, the buy side. And I made a mistake right there, because I remember I was stopped somewhere around just a little bit, stopped a little bit. Then price went on high, and even as it went higher, it never really delivered to where I wanted, about maybe around these highs over here. And that really did not happen, because that was not even my plan. My original plan, if you guys check the first post I did on Friday, was about selling gold on this specific level, very, very specific level. And that's it. You know, I don't have to, I'm not going to make this thing up. You guys go take a look at what I posted about selling gold. What level did I exactly mention? And it was about 1 to 5 risk to reward ratio. Okay, so this was the scenario here. Why did why was I planning sales right here? So first of all, we had liquidity. We had some buy side liquidity over here. Okay, so this buy side liquidity, it was just next to the daily opening. You see right there. That's what the daily opening. I think so many times you've heard people talk about sell above the daily opening, buy below the daily opening. Sell above the daily opening, buy below the daily opening. Those PDRAs, I think you've heard that before, okay? So when I was looking at this, I was like, okay, this thing is supposed to be reversing from that very specific level. And in the next video, I'm going to be teaching you guys on how to do trade. I'm going to show you exactly why specifically I wanted to sell from this specific, apart from that being the above the daily opening, and also being we having liquidity over there. So that being said, so for inexperienced traders, I wouldn't really advise you to sell them immediately, because I know what I was doing, and I have experience with this. Maybe with what you have done, once I give that level, you now switch to 5 minutes. Take a look at how price is structured from that level. And as you can see, it just rejected and created this bearish fair value gap right here. You see this one? on 15, no, sorry, this 5 minutes, this one right here. So you are supposed to be waiting for price to retrace back into this gap or somewhere around here. Even this one, we have the second one right here. This one, then you sell it from here. You put your stop loss above that high. That's, actually that's now an ICT concept. Most of my concepts are ICT concepts, but I do have I do add my own confluences in, what I feel like should be going on there, or maybe 3 minutes, or let's go on 1 minute. So for example, on 3 minutes was even better because, as you can see, was this an inversion? Not really. It did not give us such a better inversion, but yeah, it was kind of an inversion. So this one was supposed to be, most of the time, this is very strong in holding price, whereby price taps liquidity, then immediately violates those bullish caps that was below there. So you just wait for it to, come back in that level, put your stop loss right there, and sell. So I'm expecting, even during the opening, this is what I'm expecting. I'm expecting, if possible, if we can tap that area, we put our stop loss just right above that high. Then we target. Sorry, that's a reverse entry. Let's use this one. Yeah, just right there. We put our stop loss just right above there, and we are going to be targeting this bullish daily fair value gap. That's our drawn liquidity. Where is it? Where is it? Or you can even target these lows, this Friday's lows, this one here. That's around 17R. Or you can just target that low, that daily gap low, just right there. That's going to give around 1 to 10R, okay? Like that. So I'm expecting on next week when you open, we are likely to, jump up right here, then, drop down. But as I always say, is that every week usually comes with its own agenda. So I wouldn't really advise anybody to just, immediately get on it right here, because, with the geopolitical factors going on, you might find, maybe just Trump said something, or some company did something. Like, for example, this weekend we've had issues about tariff wars are coming back in again, meaning that Trump is putting tariff to those European countries like France and the rest. And I think it's something with 10%. And you see, what last time we had those type of tariffs, and you guys saw what was happening, especially on Nasdaq and, US indices and so on. So those type of factors can really make the market misbehave. So when you maybe when you're expecting that maybe the price is gonna be respecting this high, it may just, price then drop, or drop then after. Once in case it drops and tap this liquidity first, then that changes everything. You're no longer looking for sales, you're now positioned for buys. So that's about gold right now. And even another better view of what was really happening here is relative. You see them? This one's here. So as ICT talks about this relative equalize, they were very smooth. They were so smooth. Some people call them dab or top. So we would actually wait for price to come and tap into that. You see how we price them and tap into that bearish gap somewhere. That was the first gap created, I think, during the open of the day, not session open of the day. And yeah, that's pretty much why I was putting my sales. And when it comes to buys, yeah, the buys that I was given, they were around this area. Yes, I think I'd given some. If you take a look at my second post on this channel, under the post section, you'll find that I talked about buying gold from somewhere here. Yeah, I was a little bit stopped with maybe a peep or something. And that was a sign that, yeah, I was on the wrong side of it. I wasn't supposed, and this was because of a confluence of me seeing somebody online talking about them planning to buy gold here. And I say, okay, let me analyze what's on the mind of this guy. Why is he planning on, buying gold here? And I said, okay, it did not really explain why I was doing it, but I could just reason and say, okay, we have some Asian liquidity somewhere below here. Yeah, price taps that, and once price taps that, we're gonna go for the buy side. Once we take the sell side, we're gonna go for the buy side, and that's what's exactly there. But it was low probability. So, but unless I was buying from here and targeting this sell side, but I took my I was targeting something way more higher, which I think I was kind of confused, and that shows you that you should not listen to anybody you are not supposed to be listening. Trust your own analysis, trust your own system, and follow anybody, even if it means unfollowing me, if you feel like. I'm bringing confusion like you have a high probability or a working strategy. You don't need to even listen to me right now. You don't even need to listen to anybody. You don't even need to listen to ICT or whatsoever. Just walk away and do your own thing, because we have different confluences, different information, different understanding of this same market. A person buying here and taking their profit up there would have just made their profit, correct, with an exit right here. A person selling from this point and targeting this low or maybe this low would have still made money, correct? So both the buyers and sellers still made money as much as you were on opposing sides. So the question is, what PD array are you buying from? What PD array are you selling from? Okay, is it premium or discount, or is it equilibrium? So for example, when you take a look at this range right now, if I care to measure, let me see, if I care to measure this range right now, maybe from this level, I'd say, let's see, from this level, I'd say that right now price is on a discount level, meaning that some sales are supposed to be happening from here, because I just measured, that specific range. So some sales can work well. And that being said, that is on gold, and that's the reason why I was talking about selling gold on Friday. That being said, Fridays are always very dangerous, and you have to be very, very careful. So that's it for this video. I'm going to see you on the next one. We're going to be talking about how to day trade correctly. Cheers. Make sure to subscribe and like the video.